Welcome to India, Dr. Mobius. Great to have you here.
Great to be back.
Do you remember our last conversation? I interviewed you in October 2016. Do you remember the conversation?
Vaguely.
Well, you had given me a nifty target. Well, almost. You said that the fair value for the Indian market is roughly about 25 times. We were at 8,500 on the Nifty at that point. And from that, keeping that as a level, you were talking about essentially a 50% upside to the markets. We are in December 2017. And you had, in fact, I must also add that you said that we would make it to 13,000 or come around to 25 times 1 year forward earnings by August of this year. Now, while we may not have made it to that mark, I have to give you credit for the fact that you were the most bullish at that time than most people on the street. And directionally, you called the market bang on, because this prediction or this assessment of the market's direction came before demonetization and before the market sell-off towards the end of the year. So we cracked big time from 8,500, from 7,000 odd, bounced back and have never looked back since, giving the return for this year to about 25% odd.
Right.
So kudos to you on that. But do you think that the story can go on? That 13,000 definitely would be a reality for the Nifty, building on gains that we made this year into 2018 as well?
Definitely. I mean, there's no question that we're going to continue this trajectory. And that's true not only of India, but of emerging markets generally. Because if you look at the emerging markets index, the global index, we are still below the 27 high. So 2017, 27, we're in a situation where we've got to break through the 27 number, and I believe we will probably go beyond that by about 20%. That's my calculation.
Wow. But tell me, I again recall that conversation primarily because you said a couple of factors would push India higher from here, which would get captured in the Indian markets move. And that is full implementation of GST and pick up in earnings because of that. Where are we in terms of what you've seen as far as GST implementation goes? And what do you make of the earnings cycle?
There's no question that GST implementation has been very complex, as we just heard from the principal advisor to the economy. It's great that they put it in place, and now they have to fix it. They have to get it implemented. And there's no question that there's a lot of complications, particularly in the service sector. I believe the different categories of tax are much too complex. That's right. And hopefully they'll simplify that. But probably the most interesting and important factor now is the behavior of the individual states. Because the move by Moody to put more and more power in the hands of the local states at the local level is going to have a very beneficial effect on the economy going forward. And there'll be tremendous differences from one state of the other. You're going to see some states surging ahead, some not doing so well. But overall, it will be a very, very beneficial impact to have that kind of state-level attention.
Right, but when do you see that, the transition to GST and its full implementation resulting in earnings? Because I remember you mentioned that by FY19, you see earnings picking up to 18 to 20%. Right now, there's a big lag there. We are still struggling with breaking past 10%. Every year we start out with 15, 16% on earnings projections, and then we scale it back, and the reality turns out to be, an 8 to 9% kind of range.
That's the average. You must remember there are, of course, a lot of laggards, but the good companies are growing at least 20%, and maybe even more. And I believe that's what you got to look at. You've got to look at those companies that are really leading the economy and growing at the pace that they should be growing, which should, given the fact that the economy is growing at this pace, the company should be doing at least double and even triple that rate.
No, but the average baseline, do you still keep your view that FY19 will capture the full effect of GST, and that will reflect in earnings growing at 18 to 20%? Do you keep that view? Do you still hold on to that range?
Yes, I do. But again, as I mentioned, there'll be a lot of laggards so that the average may be pulled down. Let's put it this way. If you did the average based on market capitalization, you would probably get closer to 15, 16, 17, 18% level.
Okay. Let's talk about India's growth potential, right? We have seen the numbers hit a bottom at 5.7. The last print had come in at 6.3. What kind of sustainable growth trend do you expect from India?
I think that you're going to see an accelerating trend. And we're already beginning to see that, as a result of the reforms that have taken place. So 10% growth is in the cards. There's no question that this will be achieved again going forward. And I think a lot of the impact of the urbanization of the economy will push this number forward. In other words, you're going to see this acceleration in the economy. And most importantly, I believe, is if the government is able to implement a privatization program which is meaningful and aggressive. In other words, particularly in the, if you look at the infrastructure sector, more and more privatization, railways, power, roads, bridges, et cetera, et cetera. This has to be very aggressively done because that will push forward the economic growth of the country. And more importantly, it will draw in capital. It'll mobilize capital at a faster pace than we're seeing now.
But, at some point, Dr. Mobius, one would believe that there would be a point where money must be taken off the table. I mean, look at Maruti. It's a compounding story, and it continues to go higher and higher. And it just makes me wonder that, even at, 9,000 rupees per share, is Maruti in value zone? Because you buy it at any point, and you're able to generate returns for your investors.
But don't forget, we're looking at Maruti 5 years from now, not now.
Okay.
And you must remember, when we look at these markets, we should not be pessimistic for the simple reason that we haven't reached the euphoric stage. Markets die on euphoria, but we haven't reached that yet. It's similar to the Bitcoin situation.
Yeah, and we'll talk about that.
People are not euphoric yet.
Yeah.
Wait till they become euphoric, then we can see the end of the bull market.
Yeah, in fact, you actually made that comment recently that markets peak out on euphoria, and this is a skeptical bull market, so I think there's more headroom here. Let's talk about the big Moody's upgrade that came in for India. What does it really mean for the country?
It means a lot because it means that the minds in New York and London are saying, gee, India looks a heck of a lot better than we thought, and we're going to upgrade, and it's going to become a less risky story for bond investors. And also, of course, this laps over into equity investors.
Yeah.
So it's very good. It's very positive.
The immediate plus that most were expecting, this development to bring by is more accessibility to cheaper funds by Indian corporates, especially infrastructure companies. Would it convince global investors that the risk associated with these businesses would perhaps, reduce if they were to buy into some of these companies in India?
There's no question. I mean, these investors are basing their investment decisions on the Moody's, S&P, and all the other rating agencies' opinions. So there's no question that more money will come in if the conditions are correct. In other words, that's the big question mark.
Yeah.
If the government makes it easy for people to come in and make those investments with the proper guarantees in terms of contracts.
Right. So, what are foreign investors really looking at? Because I know that the cry for money when it comes to investment infrastructure projects is just getting louder and louder, with the numbers getting bigger and bigger. What can the government say or do to convince foreign investors that, look, your capital will be protected?
Number one, the contracts that are negotiated with these companies in any infrastructure project has to be guaranteed, hopefully by a multilateral agency, because then it gives the foreign investor some sense that they're not going to be in a situation where the contract is changed. So that's number one. Number two, the ground has to be prepared. For example, if you're going to build a road, we have to get the land in place. The government has to do that job. The private company can't do it. And if it's delayed, if this process is delayed, then it becomes a very expensive proposition. Of course, this is the advantage that the Chinese have. They can say, look, we need this space, get out, and in India, it doesn't work that way. But this is something the government has to work on. It has to make it easy for pathways to be made so that people can make these investments safely. Other than that, the investor is willing to take the risk for the actual project, the profitability of the project. That's something that they're willing to risk. But they don't want to take the political risk and the clearance risk, the right-of-way risk.
Okay, let's talk about the banking sector in India. What did you make of the PSU Bank recapitalization plan?
It's great. More capital.
Is it enough at $32 billion? Given that, I was reading now the numbers keep varying, but, you're talking about a bad loan pile of anywhere between $150 to $200 billion. I think that's what the number that Mr. Uday Kotak recently highlighted or stated as, being the pile of bad loans in the banking system. Is that enough? Is 32 billion enough?
It's small as a percent of GDP, no question about that. And it's significant enough to get the banks moving in the right direction. I think it's enough. It's just about enough. But you must remember, the government program is based on, of course, money coming from the budget, but also money being raised by the banks themselves. Yeah. So with the upgrade, they will be able to attract more capital from domestic investors and also overseas. So I think the government input will be a very small percent of what is raised in the market.
Okay, I have to tell our audience out here that, same time last year, actually, when we had that conversation in October of 2016, you had mentioned to me that you see value in PSU banks. And you may have gotten it right because we saw a big spurt in perhaps the biggest rally, intraday rally that we saw in these stocks in history. Do you think that now is the time where PSU banks can actually take off?
Our biggest allocation in India is the banks. So
the banking sector, but
the banking sector.
PSU banks?
Yes.
Okay.
Because they're the biggest and the most liquid. So
yeah. So see, that's the other trick point, right? The allocation really comes into the SBIs and the Bank of Baroda's from the banking space. But this is really about setting the banking sector right. This is about fixing the banking sector issue.
That's right.
So where do you stand on that story?
So we're now more bullish on the public sector banks. When I talked to you, a year or 2 years ago, we were more interested in the private sector banks like Federal Bank and these. Now we're more positive as a result of this reform on the public sector banks.
So you would be going overweight on PSU banks and
yeah.
across the board?
Yes.
Where does it leave the story for PSU bank consolidation? Because, skeptics believe that all of the banks will not be able to wriggle out of their issues very easily. And so the path ahead would be, the strongest banks survive and perhaps they take the weaker banks into their fold.
I think that's definitely going to happen. There are probably too many banks, too many small banks, and you're going to see consolidation coming in place. Particularly with the new rules, with the new examination of these banks to adhere to these new rules, you're going to probably see some of this consolidation taking place, which will be good for the system at the end of the day.
When we were getting into 2017, the world was a little bit wary about, okay, how will the rate tightening cycle in the US pan out? What would that mean for global liquidity conditions? What would the balance sheet unwinding by the Fed, again, mean for world markets? What will happen to the bond markets, which are seeming overextended right now? Is there a bubble brewing there? But sitting out here, as we step into 2018, one is like looking for risk factors, but there aren't any. Yes, North Korea fires a missile every odd week, and that's an area of concern. But that also, as a risk factor, is now kind of dwindled because everybody believes there's a lot of talk there than action per se. This is more rhetoric than something that can translate into reality. So, what are the risks?
There is a risk with North Korea because I believe that the U.S. administration will want to take some action, some military action, like shooting down one of the missiles that they put up. This could create a real massive correction in the markets globally, but it could happen.
When is that likely to happen, Dr. Mobius? Because you timed the target on the Nifty. You may perhaps time this too.
You must remember, you have an administration in the U.S. that wants to act, wants to do something. You see what's happening with Jerusalem. So you have an administration that is going to take action because they believe what has gone before has not worked. So this is, I don't know whether you want to call it a risk, but it's an event that would have a big impact globally. The other big risk I believe we have is the interconnectedness that we now have with the internet and with things like blockchain and cloud. The risk of hackers and viruses getting into these systems could create havoc globally, because we're now becoming much more interconnected.
Yeah.
And a lot of people say, oh, blockchain is the greatest thing since sliced bread. It's very safe, nothing will happen. Well, that's what they said with the NSA in the US.
Yeah.
Very safe, but they still have this. And the amazing thing to me is that the governments have not gotten together to attack this threat. It's a real threat globally, going after these hackers and people that are interrupting the systems. So I believe this could be a big, big game changer for the markets going forward. Hopefully it doesn't happen, but it's something we have to watch.
Yeah, hopefully, yeah. No, but then that just brings me, because blockchain is the format on which, essentially the technology on which Bitcoin is based, right? And that's what's driving Bitcoin currently. What do you see happening with that market? I mean, firstly, we were grappling with whether it's a currency, it's a commodity. Now you've zeroed in that, okay, fine, maybe you can draw a comparison with gold and Bitcoin. But then again, if it's a bubble, then does it have systemic linkages to other asset classes? It's not clear as now. I mean, the way I see Bitcoin is that there's this party happening on an island, and everybody's from a distance enjoying it, and a few people are participating.
I think Bitcoin is giving tulips a bad name.
That's true, yeah.
You know, a lot of people ask me to talk about Bitcoin. I say, look, I can't talk about religion. But the thing is, with what's happening globally is a desire, a need for transmission of money, of value, without government interference, anonymously. This is a real need. North Korea needs it, the drug dealers need it, and some legitimate people need it. Men who want to transfer money so our wives don't know it, or wives who want to transfer their husbands don't know it. So, I mean, this is a real requirement. And what's happened is that the U.S. Treasury, by the way, there's a very good book about this, Treasury's War, about how the U.S. Treasury has been going after banks who transfer money illicitly and so forth and so on. But as they become more aggressive, then people try to find ways to go around the system.
Yeah.
And this is what we're seeing. So Bitcoin represents a means of transfer, but not a means of value. So when people say, are you optimistic or pessimistic, are you positive, negative? I'm both, because I can see the need for this transmission system, but I don't see it as a store of value. It's not. So
many people believe that the need is actually speculative. So that's an interesting perspective that you're offering, and perhaps a bit contrarian as well to what a lot of global market thinkers have been talking about. I mean, they've just gone overboard and just rubbishing the trade completely. But you have said that, yes, it's a bubble in the making. What happens when the bubble bursts? I mean, we are at 15,000 in a matter of a few days. Can we go, I mean, I was just talking to somebody in my office today. They're saying 50,000 is a possibility as well. Or, the Bitcoin futures supposedly are indicating 50,000.
You see, the reason why anything can happen is that we now have a generation of people below the age of 30 who believe in the internet, who take the internet as something that they live with every day. Yeah. And I remember I was in Hong Kong 2 weeks ago and sitting down with my IT people, and one of their friends came in and said, gee, I just made some money on Bitcoin. I said, show me. He said he had his little laptop there. He was on the Tokyo market for Bitcoin. He was buying Bitcoin there, and he was selling it in China.
Oh, wow.
And he showed me the screen. I said, who's running this? He said, I don't know. I mean, but he has faith in this. And this is something that we must understand.
Fascinating, actually, to say the least. Exactly. Yeah. But if and when the bubble bursts, because it has to, so you've laid out a timeline that maybe a year, 2 years down the line we might see. What would it mean for asset classes? How much of that is really a real risk? Because I don't know whether there are any direct linkages with with financial markets just as yet, unless those linkages come through in due course.
I don't think there'll be much
impact, right?
Much impact at this stage. Now, if you and I are trading on Bitcoin next year, because we're convinced that it's a way to make money, then we're going to be in trouble.
Yeah, what if more and more exchanges get Bitcoin and start trading in the futures and the market expands and gets deeper? Then can it be a real threat?
Well, you know, the interesting thing is the Chinese have already tracked down on it. They have forbidden any, what do they call them, IPOs, CPOs, whatever it is, in China. And I think some other governments are beginning to wake up to the dangers. Interestingly enough, the Bank for International Settlements have recommended to all central banks to create their own cryptocurrencies based on their own currency. So that is going to be a competition in some ways. But the question is, can you transfer anonymously? That is going to be the key.
Should Indians invest in Bitcoin, Dr. Mobius?
No.
Okay. Fair enough.
But use it as a means of transfer. So it's okay.
Yeah, okay, fair enough. You know, the other thing that just came to my mind was that people have a lot of money. That's why they're going into Bitcoin, right? With easy money policy by global central banks, you've used all asset classes. So now where do you park in your money to generate that alpha? Let's go and invest in Bitcoin. That brings me to my next question, which is, now liquidity conditions are going to get tighter getting into 2018. Goldman Sachs is calling for, 4 rate hikes into the coming year. I mean, there are different projections. I'm sure Barclays has made its own projections as well. But, with all that pressure on liquidity, Bank of England has also hiked rates. The ECB's stepping back on and moving towards policy normalization. The RBI has indicated that they are in a long pause mode and will be watching out for upside to, as far as inflation risks go into the coming year as well. In that sort of an environment, what does that do for, the liquidity conditions that have fueled asset prices for the last 9 years?
You know, what I've been trying to tell people is look at the history of interest rates, just taking emerging markets, and the emerging markets index. There's no correlation. Sometimes the interest rates go up and the market goes up, which is not what you would expect. Sometimes it works the way it does. You do expect the interest rates go down, the market goes up. So this is something that people have got to realize, that the interest rates do not determine the direction of the market on a regular and consistent basis.
But Dr. Mobius, that's, if you look at the previous cycle, that was the time when growth was also very strong. So interest rate, there was an overlapping period, I remember, between 2004, 2006, when rates were going up, but growth was going up too. So the markets believe that rates are going up because the underlying economy is looking very strong.
That's right.
That's what we have now. Right now, it's subpar, and rates are already going up.
But don't forget, we're now seeing a resurgence of growth globally. So you could have higher rates.
You see growth coming back.
Yeah. The other thing you must remember is that we really don't have a handle, and we're losing the handle on money supply because you have the cryptocurrencies to begin with. You have all other flows that people don't really have a handle on where the flows are going and where they are. So this is another thing that we have to remember. There's plenty of liquidity around for the right projects, for the right opportunities. And you must also remember that as interest rates move up, banks offering a higher rate of interest, more money will flow into the banks. So you have that effect. Don't forget, there's a lot of people that have been spending money simply because they don't see any sense in keeping it in the bank. The interest rate is not high enough. So this is the problem that you're going to face when you're trying to measure the liquidity of the system. I'm not reliant on these measures, frankly. I don't think they will tell us very much.
So you're very optimistic stepping into 2018, that there's still compelling reason to buy emerging markets in India, even at these levels.
Definitely.
Is that the conclusion that we draw today?
Definitely.
Definitely,
That's
okay.
And
again, we can double up from here?
Yes.
Is there potential?
Why not?
Okay.
Particularly in the private sector, going after private investments. I think there are a lot of opportunities there.
In the investment-led themes of infrastructure, engineering, and construction. Okay. Dr. Mobius, thanks very much for your thoughts.